Sylvia's Traders Lounge, in partnership with Scope Markets, welcome you to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Today's guest is Tammy Marshall, and our theme is how to use Fibonacci analysis for stocks trading and why the indicator is relevant for technical analysts.
Welcome, Tammy. Tammy Marshall is a technical analyst specializing in Fibonacci analysis. While working with children, she began to learn about trading through her husband, Bruce Marshall, who has been in the trading industry for over 30 years. Learning to trade made more sense to Tammy so that she could still be a stay-at-home wife and mother. Through Bruce's affiliation with Simpler Trading, Tammy met Carolyn Boroden, the Fibonacci Queen, on a company trip to the Grand Caymans, and that is where it all began to click. Carolyn was looking for someone to mentor and train in her room, and Tammy was the ideal choice. Fast forward to today, Carolyn has been training Tammy in Fibonacci analysis using the program Dynamic Trader. Carolyn has hired Tammy officially years ago, and recently Tammy joined the staff at Simpler Trading. She does her technical analysis daily in the Fibonacci room while also moderating the live trading chat room. So welcome, Tammy. It's great to have you. It's an honor. And maybe you can start off by telling us how you started your journey into trading, your experience and meeting the Fibonacci Queen, and how that helps you in running your trading room.
Yes, good morning, and thank you for having me. It's an honor for me to be here. So I guess I'll go back and give you a little bit more of my background. I was a teacher for 15 years and then started a family and wanted to be able to still be at home with my children. And my husband had already started teaching me how to trade while we were dating. And then, of course, at this point, we're married. And while my daughter was only not even just turned a year old is when, and she's 7 right now, that's when I met Carolyn Boroden. That is the Fibonacci Queen. She's very popular all over the world. She's on Jim Cramer quite a bit. And you can find her. She's Fibonacci Queen on Twitter. Well, she met me when my daughter was about a year old, which was 6 years ago, and taught me about her process, which that is what attracted me to Fibonacci work. Was I always saw my husband trade, and he's more of a fundamentals guy where he's reading the news and makes trades because of those different decisions. What I liked about Fibonacci work was that it actually gave me a setup zone and taught me also where I might get into trouble and where I needed to, the green, extension numbers where I need to take my money. So that is why I decided to start training with Carolyn, because her work made sense to me that there was defined risk. So she started training me, and after training me for a few years, she ended up hiring me. And then, this year, the staff at Simpler Trading hired me to work with Carolyn. She and I worked together in the Fibonacci room at Simpler Trading. And so that's the reason why I decided to go into this, is because I can still be at home with my girls. I have an 11-month-old and a 7-year-old, and I am homeschooling my 7-year-old this year. But I work full-time and am able to take care of my children also during the day, which that was what made it so attractive to me, going to learn this analysis, is because I can actually work from anywhere in the world as long as I have a Wi-Fi connection. So I did just go and stay with my mother for a few weeks in Georgia in June. So and she's in Georgia, I live in Texas. So it's a great job to be able to be in. And the technical analysis is fantastic for giving you defined risk and letting you know what you need to do with your trade.
All right, so maybe you can tell us, with all the indicators that we have in trading, why is the Fibonacci indicator relevant to you specifically when it comes to trading U.S. equities and also for technical analysts?
Well, I think it's wonderful, like I said earlier, because of the defined risk. We give you a setup zone. We tell you, in a trigger is what we use. That's where the 8 and 34 moving averages cross each other. So setup plus trigger. Then you enter the trade, and then we say you manage the trade. So we actually give you an equation. You have your setup, then you have your trigger where the 8 and 34 cross each other. equals you enter the trade and then you manage the trade. And what we mean by manage the trade is if you get into any, if you're bullish and you get into any resistance on the upside, or you get near your extensions, which is our targets, we tell you to trail up your stops, because that is where the move may end. And the same if you're bearish, we give you support where that bearish end may get in trouble. And we also give you extensions on the downside where you want to trail up your stops and start taking some of your money off the table.
All right, so for the beginning traders, how would you define retracements and extensions?
Basically, the way that we come up with retracements and extensions is that we use, we take swings that are on the chart and we either go from the low to the high to get retracements, or and extensions, or the high to the low to get retracements and extensions. And I will show you more about that when I do the presentation. But basically, you are taking points on the chart that are highs and lows, and that is how you come up with your retracements and extensions.
All right, now we know that we have traders who are more geared towards technical analysis like yourself. So what is your trading philosophy, if you have one, or your go-to mantra when it comes to technical analysis and the application of technical analysis when trading stocks?
Well, my go-to every single day, in and out, is setup plus trigger equals trade entry, and then you manage. That is what we say in our room. And we say, you know, if your setup zone is busted, then get out of the trade. So that is what we live by in the Fibonacci room. And it's awesome for beginner, especially for beginner traders, because if you're a beginning trader and you are kind of lost and you're not sure, I really need a recipe for what I really need to do, well, this is it. That is one reason why I was so attracted to it, was because as a beginner trader, I was looking for something that would tell me exactly what to do. And this tells you what you need to do.
All right, I guess now you can share your screen and then you can go to the live practical illustration of how you normally conduct your analysis using Fibonacci.
Okay, fantastic.
Yeah.
Okay. This is the introduction to the Fibonacci time and price analysis. My name is Tammy Marshall. On Twitter, I am at TraderTammy1. And like I said, the Fibonacci Queen is Fibonacci Queen on Twitter, if you would like to follow her also. We do try to give setups on there. And obviously, if you have questions, we are always happy to answer questions on Twitter also. So I'll start off by, asking the question: what would have told you to be a buyer in TTWO in June? Okay, if you're looking at this chart, what would have told you to be a buyer back here on June 5th? Okay, you can see the number there on the bottom. June 5th, you could have been a buyer right there. What would have told you that? Well, what we do in the Fibonacci room is we take swings and we compare them. So I took this swing back here of $24.27. I did that high to that low to this high, and it gave me that symmetrical support you see there at 125.01. Then I took, like we were talking about earlier about retracements, I took a low to a high to get a 50% retracement. So then I get my setup zone, 124.70 to 125.01. This is what I was talking about, setup, and we'll go over a trigger later. Setup plus trigger equals trade entry, and then you manage. What we say in the Fibonacci room is put your stop just underneath this 24.70 to 125.01. Put your stop down here. If that setup zone is busted, then guess what? The trade is a bust. But if you had put your stop under here, guess what? You never came even close to it again. It went straight up, and these green numbers are the extensions. And we say many moves tend to terminate at extensions. You can see here where it started to stop there at that 55.92, came down a little bit, and then kept going. But we had symmetry support combined with a 50% retracement that gave us the setup. Why do we use this type of Fibonacci analysis? This goes back to why I started learning this in the first place. It enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. The targets are those green extensions. We color them green because we say there's your money. Take your money when you start getting up to those green extensions. This works on any time frame. Okay, I have a live trading room and I'm happy to pull the screen over here in a little bit and show y'all exactly what we do in there. I keep up charts 24 hours and I do different time frames. This works on any time frame and essentially with any good market data. We've applied it to stocks, ETFs, futures, and Forex. And it's excellent with option strategies, but I know y'all use the stocks and equities. Listen, it is the best with stocks because you can actually put that hard stop in with stocks, whereas it's more difficult with options. So stocks is actually where our clients that trade stocks, they're the ones that do the best with our work. You can see things in the market that you will never see using indicators alone. I do think that people get very overwhelmed with the amount of indicators that they use. That's what people in our room have found is that if you use the Fibonacci work and then maybe have your 2 or 3, 4 maybe indicators that you use with it, you know, don't make it too hard on yourself, you know. Fibonacci numbers, okay? The Fibonacci number series go 0, 1, 1. So 0 plus 1 is 1, 1 plus 2 is 3, 2 plus 3 is 5, 3 plus 5 is 8. That is how the whole number series goes. They continue to infinity by adding the 2 previous numbers. The Fibonacci ratios, y'all, this has been around forever. Fibonacci's been around forever, so you can actually Google that and see how it relates in nature. Some examples are nautilus shells, flowers, your fingers are Fibonacci numbers. The examples are everywhere. And so the theory is that if nature acts with Fibonacci ratios, then so do our brains, right? So, because we are nature, we're human nature. The ratios we use are 382, 50%, 618, 786, 1.0, 1272, and 1618. And sometimes we use 236, 2618, and 4236. But don't get bogged down in these numbers because you don't need to know them. All you need to see is what's on our charts because we tell you exactly what your setup is and what to do. I can show you where the 6818 comes from, but how are the other ratios derived? 1.0 minus 618 is 382. 1.0 divided by 2 is 50%. Square root of 618 is 786. 1618 is the expansion of 618. The square root of 1618 is 1272, and 618 minus 382 is 236. Okay, and this is what we were talking about earlier, the Fibonacci price retracements. For possible support, we run low to high swings using the ratios below. For possible, and now support is going to be what you need to make a bullish trade. It's going to be underneath the price. For possible resistance, we run high to low swings using the same ratios. Resistance is going to be above the market. That is what you're looking for your bearish setups, or for where you may run into trouble if you are bullish. Let me give you an example really quick here of how you could run a retracement. Okay, so looking at this example, this is the stock square. Square has been very popular this year. I will go ahead and erase this real quick and show you how I got that set up. I am actually in that setup myself right now. So these are the retracements. You take this low to this more recent high, this low to this more recent high. Okay, I'm going to erase everything that I don't need. And that is part of my setup right there, that 618 and that 50%. Then what I would also do is take this high to this low and take it to this high. And that is also part of my setup. So my setup zone in square that I am in right now is 132.83 to 135.76. So that's your setup zone. That includes 2 of the retracements, some symmetrical support, which we'll talk about in a minute. And then in order to get the extension, like we were talking about earlier, we do this high to this low, and that ends up being your target right there, 164.79. But retracements are where you take low to high, or another example is I did this chart for a client. I also do live charts. I will do a chart for you every day for 1 hour. I have a chart request session every single day. But a client asked me for this chart, and I wanted them to know where they may get in trouble on the way up. Let's see, wait, actually I was looking for okay, that'll do. But this is on the other side of things, okay? I'm going to look for resistance for this person. And I got the retracement of that high to low swing in order to show this 618 right here, which may give them some trouble on the way up. And then of course, I also got them some resistance, the red 1.0 and the pink 618, that's what we look for resistance. And that is also a retracement, doing this high to this low. So retracements are highs to lows or lows to highs. Okay, the next thing that I'm going to talk about are the extensions, and that is what I was just showing you on this chart right here. This example in square. Like I said, I am actually in this trade myself. Of course, I don't take all the trades that I set up because I set up, hundreds a week, but I am actually in this trade. And so my extension target off of this trade is going to be 164.79. See, it's green. That's what I say, green. When it's green, take your money. And if this were a bearish setup, let's see if I have an example. Okay, so here's a good example of extensions also, because I'm not just taking the extension off of this more recent swing. I did this high to low so that they have that extension off that swing, but I also wanted them to look at the extension off this previous swing because they may run into trouble there also. And then I did this overall high to low extension so that they could also see that one. So with this setup, I would tell them if they get into 28.45 to 28.98, that's 3 extensions together. I would really want them to watch themselves right there and make sure they're trailing up their stops. One thing I say is take your money when you can, not when you have to. You don't ever want to just take your money when you're being threatened from a trade, right? If you're happy with your money, go ahead and take it when you can, not when you have to. As far as projections, okay, these are the single red lines that by themselves are setups. Okay, we measure them from 3 different points on the chart. We compare swings in the same direction, and we use 1.0 for these normally, rarely 1618. The way that we do that, let's see, wait, wrong chart. Let's see, I can go to another example here. So here is PayPal. And the way that I got that PayPal set up that you see there is I did this high to this low to this high. And then it looks like I also took this high to this low to this high. And those gave me the red projections. And then, of course, I combined them with the retracement, that retracement off of that swing, to give myself that setup zone in PayPal. 182.51 to 186.66 is the setup zone. Setup plus trigger equals trade entry, and then you manage. Okay. What we're looking for on this trade is the target of 209 and 215. The reason we leave the 50%, 618 and 786 is because you may get some retracements there. So right now we're retracing back off that 50%, and we can go down to a lower time frame chart and look for a re-entry. Okay, so we could go down to like a 15-minute chart and look for a re-entry there. Most powerful trade setup is called a cluster, and that means there's 3 or more Fibonacci numbers that come together. And an example of that is this PayPal setup that I just showed you right here. You have 3 or more Fibonacci price relationships that are coming together. So you got two 50%, two 100%, and a pink 618. Let's see if I have any other examples. Yep, here's a cluster right here on this stock new. That was something that one of my clients asked for, 37.95 to 38.21. That is a nice example of a cluster also. And you can see these are all charts. These are all charts I'm doing for my clients in the room. Here's another one with the cluster setup, 99.13 to 100.08. ABBV, that was another one. We've got 90.89 to 91.87. But those are our most powerful trade setups, are our Fibonacci price clusters. So how do you trade this? We use something called a trigger to tell us it's worth placing a bet against that cluster. So let's see. Let's look at Square here. Okay, so Square, you have your setup 132 to 135. We'll go down to a lower time frame chart, say a 15-minute chart. Give me 1 second. I have to get the chart set up.
All right.
Okay. And if you look, so your setup zone is going to be right down here, right? Because it was 132 to 135. And 135 was pretty much the exact hit. And so that's the setup. And then you're going to look for the trigger. The trigger is when the 8 and 34 moving averages cross each other, which you see right over here. That blue line goes above the red line. So setup plus trigger. Of course, it did trigger very small over here, but setup plus trigger equals trade entry, and then you manage. So you have your setup back here on the daily setup. You have your trigger here on the 15-minute. Then you enter the trade, and now you're going to manage it. And what I mean by managing it is when you get up to these green extension numbers at 164 and 172, you're going to trail up your stops. We also use something called timing in the Fibonacci room. We will use timing to tell you when we may have a reversal in the market. So a lot of times in my live trading room that I have, I will actually do timing on like some of the futures market type stuff. Of course, that is going to affect what's going on with your stocks also. But yeah, this is, so Carolyn, who is the Fibonacci queen, she does stocks in the room. She does Amazon, Facebook, Netflix, Nvidia, Tesla, you know, some of the really big ones. She's got a list of about 20 that she does. And then and then she does them live. So I'm going to give you an example of what it looks like in my room. These are, of course, you can't see it on here because the screen is not big enough, but I do some of the futures market stuff. And Carolyn has the same thing in her room, and she's doing all of the stocks. Now, I do live stock request, but we actually have live stocks on the screen every day also. And then I leave charts up all night long. So that's good for y'all to know too, just because of the time zone difference that we do have. Okay, that's my presentation. Y'all let me know if you have any questions. I'm happy to answer any questions.
All right, maybe you can take us through another example using stocks of how you do your analysis before we start getting the questions.
Yes, I'm be happy to do that. Absolutely.
Yeah.
So let's see. Okay, well, here's a hot topic. Let's let's see, have I updated this? No, not yet. Where did my, there it is. Okay, so here's a Boeing chart. Okay, a lot of people like to trade Boeing, especially since it's such a big leader for the Dow. And I had a client ask me for a Boeing chart not too long ago, and I was able to set up this for them, and they've been taking that nice ride up. Of course, I also gave them this resistance where we may pull back, and we don't always have exact hits, but it is usually in the general vicinity of where the setup is. So here on Boeing, here's another setup, and then on a lower time frame chart, there was a trigger. And then you enter the trade and then you manage the trade. And so managing the trade would mean when you start getting up into some of this resistance, you need to watch for a pullback. Okay, so we're up into that resistance on Boeing right now, but then, you know, we see we're pulling back to the 50% here, so that could be another good place to re-enter that trade and it continued to go. Because a lot of times we'll go through resistance, it just sometimes gives us a pullback first, or we may retest the original setup zone. I do see a Boeing 30-minute chart here, but I have not checked to see if the setup zone held or not. So let me go back to that. There it is right there. Okay, so we went through a little bit, but of course we didn't trigger yet. But so someone asked me for a pullback on Boeing, and here I'm giving it to them. It's 171.69 to 172.49, because we may not pull back to that original setup, but we may pull back to a setup zone on a lower time frame chart. So just because you missed the setup on the daily, it doesn't mean you're not going to have an opportunity to get back into that trade, because we can go down to a lower time frame chart and find a re-entry point for the trade. Let's see if I have any other. Some of these are really random stocks because my clients ask me for very random stocks, and I will do any stock that they ask me to do. Let's see. Yeah. Oh, here's Shop. Shop has also been a hot topic. I have the setup zone in Shop as 966.12 to 969.03. Setup plus trigger equals trade entry. And then, of course, there is some resistance on the way up. So I told them to watch out for that on the way up. So that is another good example. And I'm happy to do, if anybody has a stock that they want to see done live, I'm happy to do that. I'm happy to see if it's setting up, you know, and if I can do a Fibonacci chart on it.
There has been a lot of chat on gold lately. How about gold? Commodity.
Absolutely. I'm glad you asked, because I actually do gold live in my room. My charts are put up. I don't know what the time difference is, but I put my charts up Sunday evenings, and they stay up all the way until Friday afternoons. And gold is one of the ones I do live on my chart all the time. So let me grab it from my other chart here real quick. So this is called a continuous contract in gold, because the other day we made such a huge low, a continuous contract, and it's weekly. We had that huge pullback. So I had to go down to a weekly chart in order to get, or go up to a weekly chart in order to get the setup zone. And it is 1871 to 75. That is the setup zone. We have triggered. And now, live in my room, I actually went to a 30-minute chart and made some of my clients very happy. I had a setup so that a lot of people didn't catch that bounce, because I think it happened overnight. It may have happened actually when y'all were awake. It happened overnight here in the States. But so a lot of my clients missed that original setup that was on the weekly chart. So when we came back down here to this low, I had a new setup for them, and they took that setup and rode it all the way up. And then I had a cluster of resistance right in here, right in this area here. And they got out of the trade yesterday because they saw that resistance and didn't want to ride it anymore. We ended up going slightly through it, but so that was a nice little run from 1919.7 up to 1974.80. So that is a great example of what we do in our room. That is a huge move in gold, and I had some very, very happy clients yesterday. So right now, I have run another pullback in gold. It's coming in at 1943 to 44. That has bounced. And the target off of that move is going to be 1983. As you can see, we came up to this 786 and pulled back again and retested that original setup zone, which is very normal. That can happen sometimes. And we have bounced again. And now we are looking for this resistance at 1980 and overall target of 1983. So I don't want the work to overwhelm you if it seems overwhelming, because we can answer any questions you want in our room, and we're very good at teaching you how to use the work, because I do feel like people see something like this and it just is overwhelming. I remember what it's like to be a beginner, but I can give you clear parameters and say, this is what you need to do, so that it does not seem as overwhelming as it can seem sometimes.
Okay, so another question is, how do you combine Fibonacci with other tools? Because guys can see moving averages on the charts and the fibs.
Okay, so the moving averages on a daily, the way that we use them. Okay, so shop is, let's see, let me talk about square first, because square is what we call a royal setup. Okay, so if you can see the pink line, pink dotted line here, that is our 200 moving average. The green is the 50, the red is the 13, and the blue is the 5. So we always want them to be stacked like that. We like the blue on top of the red, on top of the green, on top of the pink. That's what we call a royal setup in our room. Royal because it's the Fibonacci queen and she's royalty. So we call that a royal setup when all the moving averages are in the correct. And the pink can be on top of the blue, that's fine too, but we just want the blue to be, I mean, the pink can be on top of the green, that's fine, but we just want the blue to be on top, the red to be underneath, then either the pink or the green underneath there is what we call a royal setup. Okay, a setup that is not royal is PayPal. No, not PayPal. PayPal is royal. See, blue on top, red, green, pink. It was Shop that I just noticed is not royal. Shop has the red, the blue has crossed back underneath the red on Shop, so it is not a royal setup. We are above the 50 and we are above the 200, but we are, you know, they have crossed to the downside on the daily. So that is how we use it on the daily charts. As far as the lower time frame charts like square, we want, in order to get a trigger for the upside, we want the blue to cross over the red and be on top. And if we are doing if we have a bearish setup, we want the blue to cross underneath the red. And the moving averages we use on the lower time frame charts, the intraday charts, are 8 and 34. On the daily, it is 5, 13, 50, and 200.
5 and 13 Fibonacci numbers, I suppose.
I'm sorry?
5 and 13 Fibonacci numbers, I suppose. And now, with the clusters, how do you plot out the clusters?
How do I plot out the clusters?
Yeah.
Okay. That is a great question, and I do try to go over this quite a bit in our room also. The way I got the cluster on Shop is I did this low to this high to get my pink 618 and my 786. Of course, I'm going to erase these numbers because I don't need them. And then the way I got the rest of the cluster on here was I took this high to this low to the overall high. This high, I'm comparing swings in the same direction. this high to this low to the overall high, and this high to this low to the overall high. And that is how I got that Fibonacci. Oh, and then I also did this high to this low. Oh no, I
So
did not do that one, but I could do that one. That would be another zone of
basically,
support.
basically swings in the same direction. Okay.
Swings that are in the same direction, exactly. So I want them to all be high to low swings to the more recent high, high to low swing to the more recent high, high to low swing to the more recent high. And here's another thing. So say you're in this shop trade and we bust this original zone of support, you can make the decision to hold on until we come into one of the lower zones of support. I do that sometimes because sometimes the original setup zone doesn't hold and we actually come down to a lower one. You just has to be part of your trading plan. And if it's part of your trading plan, you can also let it come down a little bit because of course that happens, especially since the stock market has just been moving so fast. So that is a possibility.
Okay, Noel is a beginner, and one of the things with beginners is Fibonacci's tend to confuse them in regards to how to plot them, and he's wondering whether you can give him any tips on how to start out, and specifically which levels to consider, what to consider when plotting Fibonacci, because sometimes a chart can be clustered with a lot of high lows and higher highs, basically a lot of swings. So how do you really filter out the right swings to use to plot the Fibonacci levels? So
Yes, yes, I know that is one of the things that is one of the questions that we get a lot all the time. Okay, so basically on this shop chart, because I've got so many swings that are setting up nicely here, I'm not going to, like Carolyn, the Fibonacci queen, she calls it overworking a chart when you just go way too far back and you've got way too much information. I've got the information I need from looking at this more recent low to high swing, okay? So that is enough information for me to use that high to this low and any swings that are correlated with it, okay? Now it does happen sometimes where you don't have swings that are near the more recent high that you can use and you have to go a little bit further back in your data. But typically you're just looking for stuff that is close to the more recent high. So let's see, like here on PayPal, I didn't have to go very far back. I'm just using these swings here, these high to low swings from this high. And here's the thing, that is the one that I used because it was such a good pullback. And that is, the client asked me for it when it was pulling back that much, but I could have used this smaller one also, okay? Of course, it ended up getting busted. But I can use any of these swings. I can use that swing, that small one, this small one back here. I can use these smaller ones back here. You can use any of these swings. And normally what we say is just to use where is the last big low, which is right back here. So I'm going to look at anything. I'm going to look at the swing. I'm going to go from this bigger low. You know, you can see how there's a decrease here and then we go straight up. I'm going to use anything from this high before the swing before the lowest swing. So anything from here down to this lower low, and then I'm going to go on up and look at swings that are inside of this swing. So normally what we say is you want to just look at the previous biggest swing before your more recent high and use the swings inside of that large swing. I hope that helps. I know it's very confusing sometimes.
it definitely does.
All right. Tammy, I am getting that, my takeaway from your presentation is setup plus trigger equals trade entry, and then you manage. So please talk about managing risk, because that's a huge element in trading, for people to learn how to do that using the Fibonacci analysis.
Absolutely. That is why I love this work so much, because it gives you defined risk. Okay. It tells you where you may get in trouble. So, here you have your cluster of support. We've bounced. And you know, I tell people this all the time. The reason why we leave the 50%, the 618 and the 786 is because that is where you may get a pullback. So say you have 100 contracts of stock that you've bought, one of the stocks, and you get up into this 50% and you're like, well, that's a lot of money and I'm really happy here. You don't have to sit through that pullback at that 50%. You can go ahead and take your money. Now, we do say to hold on to the extension targets at 209, but if you're managing your risk and you're happy with your profit, you can take your profit when you get into one of these one of these extensions, yes, like the 195, the 197, or the 200. Because you can get pullbacks sometimes, just like I showed you earlier on the gold. You know, we came down, hit the support, started taking off, and when we got up to the 786, we got into some trouble and it came back down. Well, that's a nice little move all the way from down here at 1944 all the way up to 1968. And if you're happy with that move and you want to take your profit overnight, then you can do that. But yes, managing risk is a huge thing, and that's what I tell people. That's why I give them these resistance levels. Like this is a Regeneron chart that a client asked me for, and he asked me for something on a 30-minute. And the reason why was because he had his setup on the daily, but he wanted to look at some shorter term resistance. And so I gave him this, and he was thankful because he was like, you know, anywhere from 614 to 626, I could start getting into some trouble because we have some extensions and some symmetrical resistance. So he's keeping an eye on that. So that's what we do in our room is it may look one way on a daily chart, but we can go down to a lower time frame chart and show you if there's anything that's going to get you in trouble or show you if there's a new place that you can re-enter the trade. So that's the great thing about our work is I love that it just tells you where your setup is, where you may get into trouble, where you might need to go ahead and take your profit, or maybe take some contracts off. You know, you have 100 contracts. Let's take 60 off and keep 40, let them ride and see what happens. But you can, you know, it's a good play. It's a good way to be able to tell you to get out of the trade if you need to. Or to re-enter the trade. You know, you could add on more contracts. Maybe you didn't get enough contracts the first time and you want to go down to a lower time frame chart and get some more. Well, that's something else that we can do for you.
All right, and then you talked about trailing stops earlier on in your presentation. So can you just show us, like, using an example of how you add on to your stops?
How I do what with the stocks? I'm sorry.
You can show us more about trailing stops and what that means to traders.
Yes. Okay. So basically, let's see if I can find an example here. Okay. So here on Shopify, you have your setup 966 to 969. Then plus trigger equals trade entry, and then you manage. Okay, so you would want to, when you get up to this resistance, anywhere 1053 to 1066, you would just want to keep an eye on it, okay? And if you get up into that and you see it starts to come down too much and you're feeling uncomfortable, you want to go ahead and put that stop in and get out of the trade if you are happy with your profit, okay? So what I mean by trail up your stops is when you're starting to get into places where you have your resistance or your extension targets, you want to put your stop up underneath that. And here's the thing, you've got to decide what's right for your trading plan. Some people in our room would move their stop up underneath 1053 and 1066. And if it starts coming down, they'd go ahead and get out of the trade. Some of the clients in our room, they just ride it out. They let it come up into resistance. Maybe it comes back down to the setup zone. Then they let it take back off again, and they don't trail up their stops until they start getting into extension targets. So you just have to decide what you would like to do as part of your trading plan. And usually what we can do is, if this is what the setup looks like on the daily, we can go down to a lower time frame chart and see what it's looking like on there, and we can give you our opinion. You know, this is what I would do, or you can decide to stay in up into the extension targets, which is what a lot of our clients do.
All right, so as we conclude this webinar, you can tell us which books or podcasts you can recommend to traders on Fibonacci analysis.
Yes, so I have the number one book that is always sitting right here beside me is my Fibonacci trading book. It is by Carolyn Boroden, who is the Fibonacci queen. So it's called Fibonacci Trading and How to Master Time and Price Advantage. Anybody that wants to learn how to do Fibonacci work, I highly recommend that you buy this book. It's on Amazon, you know, or but it's called Fibonacci Trading, How to Master Time and Price Advantage. And then the other thing I recommend is the Fibonacci Queen has a lot of great videos on YouTube. So if you just Google, or I mean, if you just do YouTube Fibonacci Queen, you can get her videos on there. And I also recommend following both of us on Twitter because we put a lot of great information out there.
All right,
and if you're really interested in doing your own Fibonacci work, the Dynamic Trader program is the program that we use. It's called Dynamic Trader. And Carol, the Fibonacci queen, she sells that, and so does her mentor, Robert Miner. He's another good person to follow on Twitter, is Robert Miner. He is the one that trained Carolyn. So Robert Miner trained Carolyn, and then Carolyn trained me.
All right. And then if someone wanted to join your trading room, how would they go about that?
So go to Simpler Trading. So, well, this will just show you kind of what our site looks like. It's Simpler Trading. And then we are on the, this is the actual live site, but our room is the Fibonacci room. This is the Fibonacci Queen right here. But to go, let's see, Simpler Trading, Fibonacci trial. That is the actual, we do a $7 trial for 1 week. And that is the actual website right there, simplertrading.com, join Fibonacci trial. And that is these are some of the different things that she's been on: Mad Money, CNBC, Money Show, The Street. Carolyn's very well known everywhere. So, and that's how you would get to the trial.
All right, Tammy, it's been nice having you. So aside from Carolyn Boroden, who is your trading mentor stroke idol?
Okay, well, that would be my husband. His name is Bruce Marshall. He also works at Simpler Trading, but he's been trading for over 30 years. He actually has not had a losing trade in, or well, he's only been doing the service at Simpler Trading for 7 years, and he actually has not had a losing year since he's been doing the service at Simpler Trading. Before that, he was a stockbroker before that, but so he is the one that has taught me how to trade, and then of course Carolyn's work is what helped me to define my risk. So I am very fortunate that I have Carolyn and Bruce by my side. So Bruce Marshall is his name, and he's awesome. He's also on Twitter.
All right, so maybe you can give us your last parting shot to the traders, and then we can wrap it up.
I'm sorry, give my last what?
Parting shot. Your last advice to traders.
Oh, my last advice. Sorry. Well, my advice is, you know, make sure that your trading plan is working for you. Make sure that you have a trading plan. And that's what we talk about in the Fibonacci room. We give trading plans and guidelines. I list them every single day in our room, and I go over how to use the work every single day. So make sure you have a trading plan that is working for you. Make sure you can define your risk. Make sure you know when you are going to get into trouble, or when you need to re-enter a trade, or maybe where you need to take your money. because that's what it's about. It's about defining risk, and it's about making sure that you stick to a plan, because we all know the psychology and emotion in trading is the hardest part. So you have to make sure you have a plan that you can stick to so that you can wipe that that emotion out of your head, because that is, psychology is the hardest part of trading.
All right, so that comes to the end of our webinar. We are thankful and we'd love to have you again in the future. We continue to ask people to open live accounts with Scope Market Kenya so that they can be able to trade using the tools and the learning that we've gotten from Tammy Marshall today. So until next time, goodbye, Tammy. Have a good one.
Thank you so much. Y'all have a wonderful day, and I'll talk to you soon.
Thanks guys for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar. Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading. Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.